Welcome to Farm Food Facts. I'm your host, Phil Lempert. We hear a lot about the importance of big data, but what does that really mean? Well, today, our guest is Jim O'Brien, who will bring his insights and clarity into empowering the producer through big data. Jim is the co-founder of Agrograph and has held leadership positions at 4 startups. His experiences have taken him around the globe, from wine grapes in Europe to potatoes in the UK to weather forecasting in Southeast Asia. Jim was on faculty at The Ohio State University in Ag Extension. He has led product innovation teams at several multinational corporations that range from the Weather Channel to American Family Insurance, along with financial services and healthcare. Jim, welcome to Farm Food Facts.
Thanks, Phil. Glad to be here.
So I guess give me the 101 definition of what big data really means.
The way we look at it on the agri-finance side is really kind of encapsulating all this information that we know about a piece of land, a parcel, if you want to call it that, and distilling that into a useful set of data, whether that's a sustainability audit or a credit risk, kind of a FICO of ag, which we'll talk about in a minute. That's, to me, there's a lot of data, but what the world doesn't need is more data. What the world needs is solutions, and we're really focused on taking this and aggregating this data into easily digestible solutions and indexes that really help to drive a need at an insurer or bank, what have you.
I think you're right on when we talk about data, because, in talking to supermarkets all the time, especially on their frequent shopper card programs, they've got boxes and boxes and boxes of data, but they're not doing anything with it, or they don't have a resource such as you who can really look at that data and turn it into something useful for them. On your website, you say that you can address just about any production, climate, or global market request in the field level. How do you do that?
Yeah, we're a data platform, Phil, and what we do is use kind of combine, again, like I was saying before, in big data, we combine satellite imagery and machine learning and crop models to create, agricultural information at the field level. So we could look anywhere in the globe and tell you any crop that's planted, and for a handful of those crops, do a yield estimate for. But otherwise, we can do biomass estimates and water use and irrigation. So, for us, we're not we don't do precision ag. We're not telling farmers how much fertilizer to put down. We're not doing a global grain forecast, although we can. Really focused on the agri-finance side of the industry and helping folks understand, based on their yield potential and cropping history, kind of their credit worthiness from a banker or insurer standpoint. So those industries can really understand, what's that risk I'm taking on? Again, going back to think of it like the FICO score for agriculture.
So when I look at what's going on in California and in the Northwest with climate, with fires, with droughts, how nervous are those banks and finance people right now when you're talking to them?
To answer your question, there definitely is some uncertainty, but it's not anything they've not dealt with historically, and that. To a certain degree, these industries have dealt with this uncertainty mostly through going out and talking with folks. And the difference today, and really COVID helped drive a lot of this change, which is already changing in ag. Ag has always been kind of a slower adopter of technology, is the ability to be able to do analyses remotely, right, from the seat of your desk. How do I go out and look at, thousands of acres and do it, accurately and standardized way from my desk? And, companies like Agrograph, and what we're offering is allowing those banks and insurers to go out and look at, huge areas and do it efficiently and effectively and accurately. And that's really what's changed. Is a lot of the industry, I'm sure, as you've talked on this podcast and in your career, a lot of the big ag startups are focused on the farmer, which is great. But again, I'd say, the number of farmers are decreasing and farm size is increasing. But what all those farmers still need is their banker and their crop insurer, right? And their ag service provider. And what we're really doing is helping to provide a more standardized and automated and efficient data set for those industries to help the farmer.
So let's talk about the farmers and the ranchers and the producers. How do you work directly with them to make sure that you're helping them?
Yeah, one way we talk about this is this lack of transparency. Works against them. Again, use an example of a bank. Both the bank and the farmer. They pay a cost for not sharing data. Bankers don't ask a lot of information for the farmer. Fill a form out, tell me how many years you've farmed and crops you've grown and the annual production history. And the farmer, let's look at 1 or 2 years of financial data. But we don't know anywhere where your 8,000 acres are located. Couldn't tell you. So this lack of transparency ends up in higher costs that both have to pay, right? The banks have to put a higher interest rate to cover the risks they don't know, and the farmers have to pay that. So, the example I give on there is, think of like stock trading, right? Back in the 70s versus the 90s versus today, right? If you want to trade a stock, back in the 70s, it cost you hundreds of dollars. Today, nothing, right? And that's because there's been this, been this evolution to share and exchange information. And for that, you're willing to give up some data and in order to get some data to pay a lower cost.
Look into your crystal ball. What are future areas of collaboration that you can envision, not only for your company, but for farmers as well as the finance folks?
Yeah, there's a handful of areas that we are focused on, and I know we haven't talked about it implicitly here, and we will now. But on sustainability and the sustainability audits, again. Agrograph, we've recently trademarked the credit score of agriculture. And for us, we're not trying to create a sustainability soil carbon market. We're saying let's help the banks and the insurers, the companies we work with, better audit and better create, what type of crop residue and tillage practices and water use efficiency and irrigation or do those farmers have on their property? So when they're going to go look at a loan or a rating agency who's doing that sustainability assessment, that they can help provide kind of some automated data to fill that report out before the farmer even walks in the door. And then they can combine that with the data that the farmer does provide to go fill out, this audit. We're also doing work on soil carbon. And now I'll say, what we've done is building this holistic model. I mentioned we work with satellites looking from the biomass from the top down, and then also from the actual carbon that's in the soil. And from there, building, are you accumulating carbon, staying the same, or decreasing? And as a soil scientist, that was a real big part for us to get involved in the soil carbon market. What could we really do in a way that we could do it accurately and at scale, so farmers can get involved with us, again, in this exchange of data. There's got to be a value exchange. Nobody's going to give you data for nothing, right? There has to be a return. You give me some data, I'll give you a soil carbon score, right? And then we have another product we're working on a parcel report. Think of like an automated appraisal report where you can help get all the information about a parcel, whether you're going to buy it or we're going to farm it. But get that within 60 seconds rather than 6 weeks.
So, you talked about the sharing of data a lot. Do you ever come across farmers or ranchers who say, yeah, I don't want to give you or the bank my data? And how do you deal with that? Absolutely.
And it's as one ag investment firm founder told me, there has to be a reason that they want to give you that data. Again, I use that exchange of value. And so many of these, I don't want to put a black eye on the precision ag area, but folks feel like they give this data to this company and then the company uses that data for their own use, right? And the farmer's just kind of there along for the ride. And we've all participated at some point. Again, I think we gave our privacy up the moment we joined the internet, right? But now, if I'm going to ask you for data about your yield, right, you have to feel like you're getting something of equal or greater value back for that, right? And for us, is saying, let me show you information I can give you. Again, we're not selling directly to farmers, but our data says, if we can help your bank better understand, your farm and your yield history and your production, and you can get a lower interest rate, well, all of a sudden that makes sense, right? Or you get more risk-based pricing. That's really the big movement in the insurance and the banking side, is how do I wrap an interest rate around risk for the bank, or how do I wrap a coverage policy, a premium based on the risk, right? Today, it's in small pockets, organizations are doing it, but as industry as a whole is still migrating and progressing towards that.
So as far as the farmers and the ranchers go, are they reaching out to you and saying, here's some other new stuff that we would love to have Agrograph get involved with and develop new tools for us?
Most of that interaction is coming through our relationship with the industry. And the industry, again, these three themes, we do work not just in the United States, but in many areas around the globe. And these three themes of convenience, consolidation, and risk management come up time and time again. That, we live in a 24/7, 365 world, right? You can buy data online, you can get access to information, but the way that the ag lending side, for instance, of crop insurance is set up, it's not really automated yet. It's not done on a convenience standpoint. And it's the same. It's interesting as you talk with banks around the globe, it's the same situation in crop insurers. Like, they want to do more parametric insurance, right? Farmers want to get paid right away to file a claim, and the insurer wants to process that claim, right? They want better customer service, but they need tools and technology to help do that. The other is this consolidation, as we've seen in many industries, but in ag particularly, and even in banking. Again, to use banking as another example, where the number of farm credits 20 years ago, there were 200. There's like 68 today. There's the same with the banks, the private banks. The numbers have gone down, and that consolidation is changing the way they run their processes, and they want to automate it as they get bigger. And then the risk management industry has changed kind of across the board. Risk management used to be key executive risks. Don't put everyone on the same flight. And now it's risk accumulation and risk-based pricing. How do I, it's adverse risk selection. How do I make sure I can get the best folks that fit the level of risk that I'm comfortable with putting a price around? And that's really how this industry is evolving and growing, and how that's, again, bringing back to the farmers and ranchers of how they're involved with their organizations to help better meet those goals.
So what would you say if someone gives you a call and says, I want to be a farmer. I want to get into farming. I see everything that's going on today. What advice would you give them?
Given they have the capital to get involved, I would start off with being willing to be transparent with their banks and their crop insurers. I think again, that exchange of value, that they want to do the best they can to serve the farmer, and the farmer wants to get the best rates that they can. And the best way to do that is to be upfront with what you're trying to do and where you're trying to grow, and either buying more land. Because folks, the industry is really looking for, there's tons of great producers out there. But again, that data isn't always reflected back with what's shared with those organizations. And sometimes there's this mismatch. So I think, having great records and access to those records in a way that the banks and insurers can help digest them, I think is a huge, again, it goes back to the question you started, Phil, at the beginning. Big data and data management, it comes down to being organized and well organized. You sometimes hear farmers have a shoebox full of receipts and data. I've not run across that. I'm sure other folks in the industry, that's not my quote. But a lot of again, as these farms get larger and more corporate and more structured, some of those issues will become more of the tail end, and the larger organizations are just going to just more structured. Hate to say more bureaucratic, but definitely more structured.
So I know you're involved in USFRA's Decade of Ag. How are you aligning with the values of the Decade of Ag, and what do you hope that Agrograph can get out of it?
Well, we joined in May, and it was of this year, and it was really a no-brainer for us. I mean, what the Decade of Ag is doing in U.S. Farmers and Ranchers in Action, it was easy to sign our name. But as we've talked today about what we do, we're not everything to everyone. We really say, what's the niche that we really can contribute to the Decade of Ag? And the two areas that we've signed up for is this investing in the next generation of agricultural systems. I know we've talked about some of the evolution that's happening in the risk management industry for ag. And then for us, strengthening the social and economic fabric of American agriculture. Again, it's one thing to be sustainable, but sustainability has to fall with profitability, right? So for us, it's really marrying those two together in a way that we can help both sides of the equation. It's not just helping the farmer, just helping the banks, and saying, let's help open and increase that transparency and that understanding. Therefore, you can better match price to risk. I think everyone would agree on that. So again, it's a more market-based approach. I think this market equalizer starts to occur when better data is exchanged. Again, using that stock industry, the prices, interest rates won't fall to zero, and crop insurance won't be free, but there'll be more based on the risk that asset and that farm represents in a way that just isn't representative today.
I also think you've said something very important that I want to repeat, that without profitability, there is no sustainability. It just, you can't keep on running a farm or a ranch if you are not profitable. Jim, thanks so much for joining us today on Farm Food Facts.
Thanks for having us. Thanks, Phil.
For more on all things food and agriculture, please visit us at usfarmersandranchers.org. Also, be sure to look out for us on Facebook at US Farmers and Ranchers and on Twitter at USFRA. Until next time.